A very warm good afternoon, everyone. Welcoming you all to the 84th edition of Zentex Talks. We have been continuously making the webinars every Friday, only because of the participants. So we wholeheartedly thank you to start the webinar. Today, we are going to see a very relevant topic with effect from July 2025 return, which is hard locking of GSTR 3B. So, with respect to hard locking of GSTR 3B, we all know that the advisory came in GST portal in October 2024 itself. There was an advisory saying that they are going to hard lock the GSTR 3B and it will become uneditable. So once GSTR 1 is filed, once GSTR 2B is received, the GSTR 3B will get auto-populated. Of course, we are going to a scenario where the amount will get automatically debited from our bank account in 2-3 years. So we are hopeful that at least that won't happen. In this case, I have also run a poll. We have also run a poll in the poll section. If you could please go and vote in the poll section on what do you think of the hard locking of GSTR 3B returns. From my personal point of view, actually it is a little tricky because the thing is it is not empowered by act or rules. So anything that comes out of GST portal should only be envisaged by the acts and the rules. But in this case, this is a simple advisory, as similar to many advisories given by the GST portal. We are not very sure how the GST portal has its authority over even the GST law. So this hard lock is brought in by the GST advisory. It was first told in October 2024 that it will be implemented from Jan 2025. Then in Jan 2025, they issued another advisory saying that it will be implemented in later period. So finally, from July 2025 tax period, so while filing July 2025 3B, the liability will be auto-locked is what is the recent advisory say. I will dwell upon what will be locked and what will not be locked as per my opinion. Of course, the finality will be arrived only by the portal. Till now, we haven't filed GSTR 1 returns as this is the first day of the month. So once it gets implemented only, we will get to know what are the hardships there because of this hard lock. But as of now, as the advisory looks as it stands now, I'm going to dwell upon the fact on what is beneficial to a taxpayer and what is not beneficial to a taxpayer compared when this hard lock is introduced from July 2025 return. So the first thing is there was an advisory. If you go to the GST portal, you can find an advisory dated 7/6/2025, 7th of June 2025, saying that the auto-populated GSTR 3B liability becomes uneditable. So they specifically used the word liability. In my opinion, as per this advisory, only the liability will get uneditable. The ITC portion will not get uneditable. In the earlier advisory given in January 2025, they said that the ITC hard locking will be implemented in future after the success of IMS. After addressing the trade concerns of invoice management system, which is already implemented in the portal. But as of now, the advisory reads only the liability becomes uneditable. So whatever we have declared in GSTR 1, that will become uneditable in GSTR 3B. So the question is, see, we don't intend to make errors and all because as we all know, many of the supplies automatically gets populated in our GSTR 1 because of e-invoice. So with respect to e-waybill data also, you can import data, and with respect to Tally and many softwares, the integration is given. So GSTR 1 filing is as accurate as possible with respect to many taxpayers. But however, in some cases, there might be some errors where GSTR 1 gets wrong. GSTR 1 gets the wrong data. GSTR 1 is also editable only. Even when the e-invoice data gets auto-populated, it is editable after that. It will give a warning that you are editing the invoice data, but even then it is editable only. So in that case, there might be some manual correction, there might be some clerical error. So what can be done when there is an error in GSTR 1? So for that point only, since the last 3 months, there is a new form called GSTR 1A. If you see the portal, there is a new form called GSTR 1A. So by editing that, whatever amendment you are trying to make in GSTR 1 liability, by giving that effect in GSTR 1A, the revised liability will get populated in GSTR 3B. This GSTR 1A, thankfully, as of now, it is available till the date of filing of GSTR 3B. So assume we have filed GSTR 1 within the due date, that is 11th of August. We found some error in GSTR 1 on 17th of the month. How we can go about it is, earlier during the last financial years, how we generally go about it is, we will file the GSTR 3B liability, correct liability we will file, because understating the liability in GSTR 3B will attract more penalties and interest. So we will correctly put the GSTR 3B liability. Whatever we have found, the corrected liability will be fed in GSTR 3B, and in the next month return, we will put that extra invoices, what and all invoices we have missed, what and all credit notes we have missed, that we will feed in the GSTR 1 of the subsequent month. But now GSTR 1A form is available, so it becomes very easy. So whenever you feel there's a mistake with respect to GSTR 1, you can very well edit it in GSTR 1A. But only one issue is, we all know that GSTR 2B gets auto-populated for our customer on 14th of the month. Once you file GSTR 1 on 11th of the month, it gets auto-populated on 14th. So whatever effect you have given in GSTR 1A, it will ultimately get reflected in his GSTR 2B of the subsequent month. So that is the only issue, but very well you can adjust the GSTR 3B liability then and there, correct the GSTR 3B liability then and there by correcting it in GSTR 1A form. Because we are very familiar with the notices of the differences between GSTR 1 and 3B. So at least with respect to this hard locking, one thing will be removed from the notices, that is GSTR 1 with 3B, because whatever is fed in GSTR 1 only will get auto-populated in GSTR 3B. Thereby, there will be no differences in future with respect to GSTR 1 with 3B. So this is the welcome move in my personal point of view, that so many manual errors. So now also GSTR 3B gets auto-populated, but it is editable. In future, it will get auto-populated and will become uneditable. Only the liability part. So what will get hard locked in GSTR 3B is, as I already said, only after the hard lock happens, we could understand the portal, because with the history of the portal, we very well know that the GST portal advisory doesn't follow any rules. Similarly, always the GST, it doesn't mean that GST portal follows the GST portal advisory, but only when hard lock comes, we would be able to rightly point out and what gets locked and what doesn't get locked. But as per the advisory reads, in my opinion, table 3.1, in table 3.1 of GSTR 3B, we disclose the liability part. In that 3.1A, 1B, 1C and 1E will get auto-populated and will become uneditable. 3.1D part is with respect to your RCM liability, that what RCM liability you are going to pay, so that you would have never ideally given in GSTR 1, because outward supplies with respect to which RCM is payable by the customer, that only we would have fed in GSTR 1. So inward supplies for which RCM you should pay, the taxpayer who files the GSTR 3B should pay, that would have never come in the GSTR 1 itself. So table 3.1D will remain editable. It is what I hope personally, because if there is some liability in GSTR 2B and it gets only auto-populated RCM liability in GSTR 2B, and that only gets auto-populated in table 3.1D of GSTR 3B, and if it becomes uneditable, there will be a problem in future, because you may not have the option to increase the liability itself. For example, say you are receiving services from advocate, it is not every case that the advocate gets registered himself in the GST portal and files the RCM liability to the customer. So in that cases, you cannot increase the RCM liability. So in my personal opinion, 3.1A, 3.1B, 3.1C, 3.1E will get auto-populated, auto-drafted and will become uneditable from July 2025 period. So the next thing is 3.1. So these are all subsections of 3.1. So 3.1 is only with respect to e-commerce liability. E-commerce operator, supplies made through e-commerce operator. I would be much clear on this. This talks only about supplies made through e-commerce operator. So if you are a person selling goods in some e-commerce websites, say Flipkart, Amazon, like that, then you would be feeding some details in 3.1.1, which will get auto-populated from GSTR1, because you would have specifically fed in which transactions e-commerce is liable to pay tax under section 9 subsection 5. So that part from GSTR1 gets auto-populated in GSTR3B. So the last thing that will get auto-populated is 3.2. In 3.2, we should disclose supplies unregistered, interstate supplies made to unregistered persons. Why this is important in GST 3B perspective means we should understand that GST is a consumption-based tax. So every state should be aware on how much revenue sharing they will get from the GST payments across the country. So in that sense, to which place of supply you have supplied, that you should specifically disclose in GSTR 1 itself. So that will get auto-populated in GSTR 3B also. Table 3.2 also will get hardlocked. In this, I haven't mentioned table 4 or table 5 of GSTR 3B. Of course, table 4 or 5 talks about interest and late fee. We will leave that. Table 4 talks about ITC. I have not mentioned it itself. In my opinion, they have clearly gave that only liability will get undeductible in July 2025 tax period. So I'm of the opinion that ITC will not get blocked. Blocking ITC also, it has its own repercussions, because assume a situation where as per section 16 subsection 4 of the CGST Act, we all know that the time limit for availing ITC is 30th November of the subsequent financial year. So, for example, in May 2024, there was a GSTR 2B entry in your GSTR 2B, but you have not availed credit due to various reasons. You have not received the goods. You are not sure that the supplier is that the specific name supplier is whom you have bought goods or services from. So you had some doubts, so you have not availed credit. In the year end only you will reconcile after filing annual return, after filing tax audit report or income tax return only. That time only while finalizing the accounts, you will reconcile and you will avail the credit what all has missed. So IMS, in my opinion, was implemented only from October 2024. So in that case, you would not have the option to keep it pending, because we all know that when you keep an invoice as pending in the IMS, it will get translated to the next subsequent month. Subsequent month, it will get translated to the subsequent IMS period. It will the invoice will get translated if you keep it pending. But the April 2024 invoice, you would not have the option to keep it pending, as IMS was not available then. So in that case, it will be very difficult for the government to hard lock it as of now. At least I think prospectively from Jan 2026, they might hard lock it. Then also they will have the provision to say that 4A5, where you put the all other ITC, will only be hard locked. The reversal will ultimately be shown by you in 4B1 or 4B2. That will be shown by you, because they can never trace what goods you have received and what services you have received. The invoices for which you will avail ITC only after the receipt of it. So that will be very difficult to be pondered by the government. So I think hard locking of ITC is a different part. In the advisory given in Jan 2025 also, it was specifically told that after addressing all the concerns relating to IMS only, the hard locking of ITC will be brought to effect. So as of now, the liability will only get hard locked. There are some FAQs regarding this also. I will complete the stretch, and afterwards I will take the FAQs on the questions from the participants. So the auto-populated fields from July 2025 return, we are very well versed with it actually, because even though it becomes uneditable from July 2025 returns, the auto-population of GST 3B occurs from the start of financial year 24-25 itself. So we very well know what fields in GSTR1 will get reflected in what fields in GSTR3B. That is not rocket science at all, because the heading itself clearly says that what will get into what. So a quick summary to make things very clearer. The outward taxable supplies which you have declared in 4A, table 4A, table 4B, and table 5 of GSTR1. If at all you have edited something in GSTR1 AMS, that also will be taken into effect, as I already said. That will get reflected in table 3.1A of GSTR3B. Then the zero rated supplies, table 6A, 6B, 6C. SEZ supplies, exports with payment, without payment, that and all will get reflected in table 3.1B, which is about zero rated supplies. Nil rated exempted. Table 8 of GSTR1 consists of 3 categories: nil rated, exempted, non-GST. I'm not very sure how many taxpayers bifurcated, but there's a clear bifurcation to say that what is nil rated, what is exempted, and what is non-GST supply. So if you have correctly fed it in GSTR1, in such case, it will get reflected in table 3.1C. Nil rated and exempted, what you have fed in that box will get reflected in 3.1C. Non-GST, what you have fed in table 8 will get fed in, will get auto-populated in table 3.1E. Here, as you would have noticed, table 3.1D of GSTR3B is missing, which was inward supplies with respect to which RCM is payable. So in my opinion, that will not get locked down. Even though it gets auto-populated, it will remain editable in my opinion. So through e-commerce operator, that you show in 14B, that will get reflected in 3.1.1 2 of GSTR3B, and interstate supplies to unregistered person, table 5 you would have fed separately in GSTR1, that will get reflected in table 3.2 of GSTR3B. So these are the things that will get auto-populated and logged in GSTR3B effective from July 2025 return. So moving on to the topic, next topic. So many taxpayers has a confusion to say that what is the effective ITC utilization? See, there is not many things that you can tinker upon while filing GSTR3B, because everything is auto-populated. One thing I would like to dwell upon is, see, the ITC rules with respect, which is said in section 49 subsection 5 of the CGST Act, talks about the rules in which, the manner in which ITC is to be utilized. So the first thing is, you should nullify IGST ITC. So even though you have CGST ITC or SGST ITC for that matter, first thing you have to do is make the IGST ITC 0. Only after then you should proceed with utilizing CGST ITC and SGST ITC. So the first thing you should do is nullifying IGST ITC. Next thing is CGST ITC. First you should do intra-head set-off. Then if there is anything remainable, you should remaining, if you should adjust it with IGST payable. Then SGST ITC, first you should set off against SGST. Sorry, there is a typing error there. SGST ITC should be set off against SGST first. Remaining will be set off against IGST. So an additional point is IGST payable shall be first set off against CGST ITC, and if there is any remaining IGST payable, then you should come to SGST ITC. We all know that CGST and SGST cannot be interchanged. CGST ITC cannot be interchanged against, cannot be used against SGST payable, and vice versa. SGST ITC cannot be used against CGST payable. There is a clear clerical error there in the third point. But one thing what we should notice, there is no restriction on how IGST ITC can be set off against CGST and SGST payable. For example, I will be much clearer with an example. Assume there is an IGST ITC of rupees 100. CGST payable is rupees 60, SGST payable is rupees 60. This can be set off in any order. Like, you can use IGST ITC 50 rupees against CGST payable and SGST ITC 50 rupees against IGST payable, IGST ITC against SGST payable 50 rupees. So remaining CGST payable 10 rupees, SGST payable 10 rupees will be there. Or else you can use 60 rupees against CGST payable itself and remaining 40 rupees against SGST payable. Or 40 rupees against SGST payable and remaining 60 rupees against SGST payable. You can ask me, seeing this example, so whatever it is, ultimately 20 rupees is payable. So I may pay CGST 10 rupees, SGST 10 rupees, or CGST 20 rupees, or SGST 20 rupees. It doesn't matter. Whatever it is, my outflow is 20 rupees. You can ask like that. But the catch here is, in some situation, we see some taxpayers having opening SGST ITC. So in such cases, if you have opening SGST ITC, it is prudent only to make sure that you use only as much as small amount of IGST ITC possible against SGST payable, because you already has SGST ITC. So always see to the situation where you have ITC in one head, SGST ITC. For example, say you have SGST ITC and you pay CGST. In such situations, you be very careful that you can tinker the combination likely to your benefit, because there is no particular restriction, and the portal also allows it. But the portal, the auto-populated thing in portal will always first they set off against CGST. IGST ITC they will set off against CGST payable, and then only they will use against SGST payable. This is the auto set off that is available in the portal. But be very clear that once you have some ITC in SGST or CGST, even then, if you are paying liability, except RCM liability, of course, I am excluding the RCM liability, that you should pay only in cash. In such case, you should definitely see whether you can use the rules to your benefit. That is IGST ITC. If you can change the proportion, and if you can check, you can use it to your benefit. So this we particularly see in interstate purchases and local sellers. They will be buying in from interstate. They will have IGST ITC, and they will be selling in locally within the state itself. They will be selling. In that cases, we often see taxpayers not using benefit of this provision. This is perfectly legal, and I would urge everyone to check. If you have some ITC and even then you are paying in cash other than RCM liability, then you should definitely check whether you are doing something wrong, and you should correct this. So the other important thing that that is to be thought upon is, with effect from September 2025, returns past 3 years. Of course, this is brought in the Finance Act 2023. They told that anything past 3 years due date will be locked in the GST portal. At least I'm happy that in this case it is envisaged by a notification. It is enforced by a notification. Then only advisory has been given by the GST portal. They said that with effect from 1st September, certain returns will be locked, which are before 3 years due date period. So we see many taxpayers paying after getting notices. They are filing 18-19 with late fee and all. So mainly, even if you're doing business now, mainly check the fact that if you have filed GSTR 9 and 9C for that period, because above 2 crores means you would have filed GSTR 9, above 5 crores means you should have filed GSTR 9C for the starting periods. You please check whether if you have missed it, and please file it within August 31, because after that they may give a relaxation. We are never sure what GST Council does, but the online filing will be disabled. Then you should go to if the officer insists, you might go to court and you might get a facility specifically for you in online, and then only you should file, within which the late fees will be boosted up than ever. So I request you everyone to cross check whether you have filed all the returns with respect to the last financial years. With respect to GSTR 99C, financial year up to financial year 2021, from 1st September it will be disabled. So please check if you have filed it. So this is the very important thing I thought I would say. So the main thing that we should remember while filing GSTR 3B is, any liability recomputed from GSTR 1 should only be given effect through GSTR 1A. So straight away you cannot go to GSTR 3B and change things. You can only effect it to GSTR 1A, and then only the liability comes to GSTR 3B, and then only you can change it. So please see the GSTR 1A return, because previously you might not have used it. You have followed the old method of adding or reducing the invoices in the subsequent period, but now with effect from July 2025, GSTR 1A is the only option if you ought to correct some mistakes in GSTR 1. So you please check to the fact. GST 3B to be filed as per circular number 170. This is not a new provision. This circular was given way back in 2022. From that itself, the GST 3B, what you should feed in 4A1, 4A2, 4A3, 4B1, 4B2, everything is given detailedly in circular. We also had a separate webinar in our Zentax talks. It will be available in our YouTube channel also. So you please check to the fact, because as lately we see many notices started coming for financial year 22-23. So while issuing that notice, they will definitely check whether we have filed this as per circular number 170, because this was effective from August 2022. So you please check to the fact that you are filing GST 3B as per the circular. So even though you have taken the ITC correctly to the electronic credit ledger, if there is some error in filing while coming to inspection or while scrutinizing the returns, they have the power to levy procedural penalty of rupees 50,000. So you please see to the fact that you are filing as per circular number 170. So, as in my opinion, the advisory talks only about liability as of now. It doesn't seem ITC will be hard locked. This is my personal opinion, but only when the portal auto populates the figures, we should know. But hard locking the ITC also, as I already said, it's very difficult for the government for various reasons. So that is to be kept in mind. One thing I would like to touch upon here is what happens to the taxable value. The advisory specifically says that liability will only get undeductible. For example, say you have given liability in GSTR 1 as GSTR 1 taxable value as 1 crore. If you intend to revise due to many circumstances, I am not going into the circumstances now. If you intend to revise the taxable value 1 crore to something else, is it possible? Because you might have the last 3 months in April, you might have clerically misentered a figure in GSTR 3B taxable value. Is it possible to rectify now? We should only wait and see. As I already said, the advisory talks only about the liability. So, if the advisory is gone by, as per the advisory, the GST portal is gone by, the taxable value should become editable only. But we are not very sure whether the taxable value should be will be locked. So we should check only when the GST 3B form arrives. So the next thing is ITC hardlock will be implemented from a later date. This advisory was given on 17/10/2024, and such date is not taken into effect itself. So please, from July 2025, I urge you all to file your GSTR1 correctly, promptly. There is also an IMS mechanism. We also have a separate Zentax talk with respect to invoice management system and how it works 3 months back. So you can check that too in our YouTube channel. Yes, now we can see the poll answers. Thanks, thank you everyone for voting the poll. So I think the participants are very familiar with the GST portal, because they have specifically said that should check its implementation, then only we can comment. So more than rules, what the advisory is given, the participants are very well versed with the GST portal. That's what I can predict now. So majority has voted should check its implementation, and then only we can comment on it. A part of participants has voted that it will ease complaints, which I will very well agree upon. So not empowered by GST rules is only a bare minimum. Some people have voted that. I think they are sole practitioners or sole professionals. So as similar to us, they are checking the rules are where this hard locking was said. They are that it is said only in advisory. So I think only if ITC gets hardlocked, it will become a difficult thing both for the government and the taxpayer. Liability, once it is routed to GSTR 1A, if it is perfectly implemented, I think it would be okay. Yes, I will take the questions now. Yes, sir, kindly forward PPT to our mail ID. Yes. Sir, port plus not allowing to set off SGST payable. Sir, this will allow, sir. Sir, two things. When I every time I dwell upon this topic, there is this doubt, sir. But I would like to clarify that only while setting up IGST payable, the portal will not allow, sir. SGST ITC it will not allow to use before CGST ITC. That is in the rules, sir. But SGST payable, IGST ITC, you can as and when feasible, you can use, sir. The portal will not auto-populate as I said, but we should only tinker the combination, use it to our benefit. It is perfectly within the rules. Surya Narayan, sir, you are contributing regularly to the knowledge building of GST among stockholders. Thank you very much, sir. This is the appreciation that we makes us go forward. Thank you, sir. Thank you very much. Does the strategy shown by you for ITC utilization holds good for filing refund claim? Sir, there is no payable in refund claim, sir. So it doesn't. First IGST ITC only you should use, sir. Yes, CGST SGST. You are asking CGST SGST how you can use that. You can yes, sir. Definitely it's possible. Definitely it's possible that you can bifurcate and use, sir. Sir, I think no one while filing refund claim entirely they are putting the deduction in CGST. They are ultimately dividing it only putting, but that also we can divide it unproportionately. That should not be an issue, sir. Thank you so much for continuous support. Thank you, Surya, sir. Thank you very much. CN rejection by recipient will be added in supplier's liability. No, sir. No, sir. Through GSTR 1A in the next tax period only it will get effect, sir. So it is not possible for the same tax period to get it effect because you will file ideally GSTR 1A in 16th, 17th, sir. The GSTR 2B gets auto-populated in 14th. So Sapan Kumar Palai, sir, that is not possible. At least discontinue GSTR 2B, sir. I'm not sure whether it is a suggestion, sir. GSTR 2B they will not discontinue, sir. But yes, sir. GSTR 2B is the prime form. From that, the ITC will get populated, sir. That's it. If the taxpayer wants to because unregistered. Yes, sir. This is what my opinion, sir. 3.1D will not. Anandaraman, sir. This is what exactly you want to say. With respect to RCM liability, it will not get hardlocked because whatever is in 2B alone, it is not sufficient for us to pay RCM because there are many other liabilities which will not come in 2B itself. In 2B, only GTA services that only are coming in 2B, sir. The rest of the person will not be registered itself. As you rightly said, with respect to direct remuneration, that and all, it's not coming in 2B itself. So 3.1D, in my opinion, is not locked. I think the advisory should have worded it better, sir, because advisory just said liability. It is liability only. Of course, it is liability only. So if it is gone as per the advisory, it will be very wrong on the part of the government. I think they would have worded the advisory well, but here we are fighting that if the notification is worded well, sir, then only we should talk about advisory. So I think 3.1D will not get, sir. Srinivasan, sir, yes, sir. Yes, sir. IGST excess ITC, yes, sir. 50% CGST, 50% SGST, definitely it will allow. Provision to be made in IMS to add left out input invoices. Yes, sir. I am not very sure the government will be keen on that, sir, because we should fix a deadline and generate GST at 2B, sir. Otherwise, it will not have any value at all. So I'm not very sure if in real time it will get updated, sir. Shivappa can have kept for 3 years all GST returns to future. Sir, I'm not understanding the question, Shivappa, sir. The notification is, sir, last 3 years, before 3 years, what are the due dates have gone by? The due date is over. Then after 3 years also have passed means from September 1 it gets locked, sir. It gets time barred and we cannot fight that. That is the notification and the advisory comes out to say, sir. Also, please arrange a webinar and IMS with practical situations, sir. As I already said, there is a separate webinar with respect to IMS in our Syntax YouTube channel, sir. So you can check. In future also, I will definitely have a webinar, so that is not an issue. Because there are many practical situations coming on daily that we will definitely handle, sir. But you please also check our webinar in our Syntax YouTube channel, sir. SGST ITC accumulation is more. Is there any option to dilute? Ganesh Shekhar Subramani, sir. Sir, you please send your contact number or email ID, sir. I'll just check with my team on what exactly is to be done, because there might be a situation where refund may arise, sir. Might be setting off some problem might be there, sir. So you please give your contact or mail ID, sir. I will ask my team to reach you and we will get it sorted, sir. Please, sir, can you, sir, with respect to ITC utilization, what I intend to say is IGST ITC can be used in however way possible, sir. It might be first set off against CGST payable or SGST payable, but vice versa, it cannot be done, sir. SGST ITC, there is a separate rule. We should set off only against SGST first, and then only we should come to IGST. Whether 2A is relevant form or 2B, sir. In many cases, some of the credit note reflect in 2B. Sir, 2B only relevant, sir. We will be very clear on that, sir. 2B is only relevant. It is only legally also as per Rule 36 sub-rule 4 of the CGST rules 2017. So 2B is only relevant, sir. 2A days are gone by. So 2A real time it gets updated, sir. So in your case, what would have happened, sir? They would have filed the return belatedly, sir. So 2B gets locked, sir. 2B is a static return, sir. It gets locked as and when it is generated. So if the supplier files belated return, in such cases, 2A gets updated, sir. So 2A we should never see, sir. Only 2B we should see. Thank you, sir. But circular number 170, what's it, sir? Can you explain related to this 3.1D? Sir, with respect to 3.1D, inward supply is liable to reverse charge. Circular number 170 has not said anything, sir. Circular number 170 mainly dwells upon how the ITC should be fed in the table 4 of GST and 3B returns, sir. So that is only with respect to table. About table 3.1D, there is not anything specific in circular number 170, sir. What should I, KPM and associates, what should I do if ITC is showing in books but not in GST or 2B, sir? Sir, we should ask, or we should please the supplier, our supplier, to file their GSTR1, sir. But because only when they file GSTR1, will get reflected in GSTR2B, sir. Because gone are the days where we have in books and we claimed ITC, sir. Those were days before 2020, sir, before pre-COVID era. In that time, we used to claim ITC whatever is in books, sir. But for the repercussions we are facing now, sir, whatever we have claimed extra, the department is asking to repay us. That is separate thing, sir. We are fighting on the legal grounds. That is separate, sir. But if it is in books and if it is not showing in 2B, you should only reach to the supplier and ask them to file their GSTR1, sir. Because the last date to avail financial year 24-25 is November 30, sir. So even after that, if they file GSTR1, we would not be in a position to avail that ITC, because it will become a time-barred ITC. How do we know if any of the credit note rejected by the dealer or the supplier? It is coming in real time in IMS, sir. You can check in it, definitely. How many, Srinivasan, sir, how many years we may preserve for books under GST, sir? Sir, as per section 36, we should preserve for 72 months, sir, from the due date of filing annual return. So if you are under audit or inspection, you should maintain it longer, sir. What happened, Maharudra Somnath brother, sir? Yes, sir. What happened if the previous 3-year return not filing, for example, GSTR 9 and 9C? Sir, definitely we should file, sir, because it will get locked, sir. Of course, now also we should pay late fee and only file, but after September 1, it will get locked, sir. Then it will become very difficult for filing, sir, because as similar to Tran 1, I'm saying, sir, Tran 1 credit got locked in the portal, sir. Tran 1 credit is something which we bought ITC from the erstwhile regime, VAT or excise tax, sir. So once it got locked, taxpayers went to Supreme Court, and then only they got the relief. High Court and Supreme Court, and then only they got the relief of getting that in their portal, online portal. So the portal will not allow, sir. If the portal not allows, you don't have the provision to manually submit the GST or 990. So it will never be possible, sir. So if anything, you can reach out to us, sir. I will share my contact number in the comment box also, sir. In that, you can please reach out to us, sir, for filing GST 990C. If any assistance is needed, you can reach out to us. If I have higher SGST credit, can I adjust it with IGST liability without considering CGST? Yes, sir, that you can do, sir. So you are asking for IGST liability. No, sir. This is the reason there is a difference between the two, sir. IGST ITC can be used anyways, sir, but IGST liability you can't do, sir. SGST credit if you have means even if you have SGST credit more, you should use only the CGST credit for IGST liability first, sir. So IGST liability should be first set off against IGST ITC, then CGST ITC, then only you should come to SGST ITC, sir. This you cannot do, sir. I am telling of the scenario where you have SGST, where you have IGST ITC and payable in SGST CGST. In that scenario only it will help, sir. That is clearly envisaged in section 49 subsection 5. This is not possible, sir. At least 2 bit to be generated on 20th of succeeding month. Yes, sir. The reconciliation problem is very big, sir. So I'm not very sure if they prolong it to 20th, then they have to extend the due date also, sir. Srinivas, sir, the last date for availing ITC means I think in GST at 3B due date in. No, sir. Srinivas, sir, in my opinion, they have specifically given the date as 30th November, sir. Because if not, they would have given the return as November return, sir. This is my personal opinion. This is the general stand that professionals also take, sir. Because in previous years also there was a dilemma saying that whether previously November 30 is amended now only, sir. Before September 30 was there. Whether within September 30 we should take or within September return we should take, there was a dilemma. We argued many cases that in September return we can take, sir, prospectively, for which we couldn't take within the due date. We argued, but in my opinion, within November 30 you should take, sir. Ideally, in October return, October 2025 return, you should take, sir. Yes, thank you all. I think I have done with all the questions. Thank you very much for your active participation. As you all know, we are Zentax Clinic. We are actively involved in GST litigation handling across India. So if there is anything to ponder upon, you can definitely reach out to us. We have a separate website, Zentax Clinic. We also have a YouTube channel. You can also check our previous webinars. This is our 84th continuous webinar. You can also check our YouTube channel. So thank you. I see many clubs coming. Thank you very much for the appreciation. We will be having regularly webinars Friday. So next Friday we'll meet you for another webinar. Thank you very much.